Hey everyone, Culture Investor back with another Coinbase video for you today. So most of you probably have heard the rumors that lots of executives at Coinbase sold the majority of their shares, 100%, 97%, whatever. Lots of misinformation out there, so we're going to look into that in this video. I'm also going to explain to you again why I believe Coinbase could be the Nasdaq for crypto. I've said this a couple of times. I'm not invested in Coinbase. I don't plan to invest in Coinbase anytime soon, especially not in this type of valuation. If there is a crypto bear market coming, then yes, you will see probably revenues slashed and Coinbase valuation probably go down because in my opinion, Coinbase is heavily correlated to what happens in the crypto bull market and in the crypto bear market. If you have any other opinion, let it know down in the comments below. And if you like these videos, leave it an early thumbs up as it really helps me out grow the channel and get my videos out there. So without further ado, let's dive into this. Alright, so last week Coinbase went public through direct listing. Obviously the price and the valuation was super high. I think the price was just over $420 intraday trading. Then the stock went down to as low as $320. But on the 14th, 15th and 16th of April, ARK Invest took this opportunity to load up on Coinbase shares. They sold some Square, they sold a lot of Tesla shares as well. So we can see actually here that on the 14th, ARK has bought Coinbase shares for ARKF, RKK, and ARKW. On the 15th, the same thing, a bit less though. And on the 16th, they've loaded up on even more Coinbase shares, but still less than on the first day. Now, since then, you probably heard lots of executives at Coinbase have sold a lot of their shares. Like I said, some rumors are there saying that they sold 90% of their shares, 70, 100%, etc. So here's one example tweet. Again, this is not hate towards Mr. Whale, actually a very, very good account that you should probably follow. Just maybe some misinformation flowing out there. So he says here that the CEO sold 71% of their shares, CPO sold 97%, CFO 100%, President sold 100% of their shares as well. Nice little meme right here. Thank you for your money, suckers. Now, the way this was misunderstood by a lot of people is because, well, when you go through a direct listing, it's very, very easy for executives to maybe sell the majority of their shares or a large part of it. But thankfully, we have people like the Block Research who have done the research for us. If you want to look at the whole article, link will be down in the description below. But to keep this as short as possible, you can see it actually here. CFO sold 15% of her shares, CPO 8% approximately, President 24%. So still a large amount, but not as large as people thought. And the most important one, Brian Armstrong, the CEO, sold less than 2%. Now, what is all of these little colors right here? You can see it up there. Sorry if it's too small, but I'll just read it. The green one is the estimated dollar value of A shares sold. The grayer one is employee options. Lots of them have probably options that they could activate in the near future. Then lighter gray is A shares and super light gray is B shares. And then you have this little color right here, restricted stock units. So again, this is a story of misinformation. People are very, very fast to jump the gun. Myself included, I did it before. I probably was a bit happy seeing this because, well, maybe the stock will go down and maybe it would be a great opportunity to buy into Coinbase. But overall, this is nothing to be alarmed or stressed about. Very, very usual thing to do, let's say, after a direct listing, securing the bag, and maybe afterwards they will activate their stock options. Obviously, when you activate your stock options, you'll have to pay lots of taxes. How can you pay your taxes? Maybe by selling some of those shares right here. Take that cash to buy into your stock options in the future. Now, last point, I want to talk about this idea of Coinbase being the Nasdaq for crypto. So Brian actually answered one of the most important points that I asked myself, and I said this in a video, is would you rather invest in Coinbase or in the crypto itself? So he answers that question on an interview on CNBC.
Over the years, people always asked me, well, should I invest in Coinbase or should I just buy the underlying asset? And I would always tell them, well, first of all, why not do both? Both are great ideas. But I can make the case for why people might want to invest in Coinbase too, which is that we're kind of not only are we're not tied to one particular crypto asset. We're adding support for over 100 crypto assets now, and there'll be more and more in the future. And we're also kind of what you might call an indexed bet or a levered bet on the crypto space more broadly.
So obviously the first point he made is obviously invest in both. Well, not everyone has the luxury of doing that, but he has a point. If you want to get exposed to this whole crypto world, then yes, Coinbase might be a good play. But then again, during a bear market, Coinbase will not really perform as well as during a bull market. You can see this in their filings. During bear years, their revenues went down. During bull years, their revenues went up. It will be interesting to see how this evolves into the future, but we're going to touch on another point, which I think this is why it's going to save their assets in the future. And it's because of institutions using Coinbase. That's where my idea came of Coinbase being the Nasdaq for crypto. So this is actually something they talked about during their Q1 earnings call. We can see it right here. So Anil Gupta asks, Coinbase disclosed that assets on platform are $223 billion in Q1 2021, of which 122 billion are institutional. Assets on platform from institutions is up significantly compared to December 31st, 2020. At a high level, what is driving the institutional business? To which Alessia has answered, our institutional business is still in its early days, but we are pleased with the strong growth we continue to see, with assets on platform growing to $122 billion in Q1 2021 from $45 billion at the end of 2020. We are seeking a wide variety of institutional clients ranging from hedge funds and corporate treasuries to pension funds and insurance companies, many of whom are entering the asset class for the first time. We think our combination of best-in-class custody, advanced execution tools, and deep exchange liquidity are leading institutional clients to choose Coinbase. Looking ahead, we see the opportunity to provide sub-custody and execution as a growth opportunity. These opportunities have a larger sales cycle and therefore are harder to predict in terms of precise timing. So this is where my bullishness for Coinbase actually comes in, especially if they can keep those institutions interacting with Coinbase. That's again where the Nasdaq for crypto comes in, because even in a bear market, institutions will probably trade crypto up and down, left and right. So this is something that they can probably gain from in the future. Custody, another big thing for Coinbase, which is exactly what Brian Armstrong, the CEO, actually said in another question during his CNBC interview when talked about and asked about the transaction fee and the competition that lies ahead of them.
I guess the other thing is that there's really a custody fee that's sort of baked into the transaction fees, which is a little different than in the traditional brokerage world and things like that. So yeah, I don't expect there to be fee compression short and midterm, but longer term, yes, I do think there could be fee compression just like in every other asset class out there. And so what you've seen is in our financials, we've started to invest in different revenue streams that are starting to provide these green shoots of revenue, and things like Coinbase Earn, Coinbase debit card, staking revenue, ways that people are earning yield on their assets. And we've started to monetize a number of things like this. Our custody business for our institutional customers, for instance. So these are providing more steady, predictable streams of revenue. And my guess is that in 5 or 10 years, you'll see that be maybe even as 50% or more of our revenue.
So like he said, and this will conclude this video, if they can continue to grow that side of the business, custody, spending, credit cards, staking, etc., then Coinbase reliability on bear and bull market gets reduced. And that's actually my bullish point on Coinbase. If they can do that, and they probably show us in the next couple of quarters, maybe the next year or so, if this is manageable, then yes, Coinbase is a very good play if you want to get exposed to the broader crypto market. So again, this answers the question, crypto or Coinbase? Obviously, he said both. I would also say both, but if I could, and if they can execute their plan correctly, then Coinbase might actually be a pretty good play, because even in a bear market, whereas your crypto asset gets reduced, Coinbase will probably still make money if they can execute their plan the way that they described it. Obviously, this is a huge U-turn from what I said in my previous videos, but again, we evolve, we learn, and we adapt. So hopefully you like this video. Let me know down in the comments below what you think about Coinbase after you've seen this. Are you bullish? Are you bearish? Did you buy Coinbase last week? Let me know down in the comments below. And as always, guys, take care, stay safe, and see you all in the next video. Bye-bye.